So how does pension drawdown tax work? If you choose to take out up to 25% of your pension at the start of drawdown, the process is relatively straightforward. You won't pay any tax. You'll only have to pay tax if you choose to take out more than 25% of your pension savings. Anything you take out above your 25% tax-free allowance counts as earnings and will be added to any other taxable income you have. If you withdraw a large amount, it could push you into a higher tax band and towards a bigger tax bill. Let's look at an example. If you took out £60,000 from your pension as a lump sum on top of your 25% tax-free and you don't earn any other income, then you won't pay any tax on your tax-free personal allowance. You'll pay 20% tax on the next part and 40% tax on the final part. In this example, you'll end up with a big tax bill. But if you took out £10,000 a year for 5 years rather than £60,000 in one chunk, then potentially you won't pay any tax at all. Remember, if taking out a chunk of pension cash pushes you into being a higher rate taxpayer, it could mean that you can't claim marriage allowance, it will cut your personal savings allowance, and if you end up earning more than £50,000 a year, it could also affect child benefit. So do think about what you take out of your pension and when, so you can pay less tax and hang on to more of your retirement savings. You can keep paying into a pension even if you've taken pension money out. This could be relevant, for example, if you continue working after 55 and still want to benefit from the free money in tax relief and employer contributions added to pension payments. But if you take any income from your pension pot apart from the 25% tax-free chunk, then the amount that you can pay into a pension in future will be restricted. That's known as the Money Purchase Annual Allowance, or MPAA. Your pension provider is required to deduct any tax before a withdrawal is paid using Pay As You Earn. And when you take your first taxable payment, it's likely to be taxed using either an emergency tax code or the tax code on your P45. You'll then need to settle up any underpaid or overpaid tax directly with HMRC. It's easy to make a pension withdrawal with PensionBee. Just visit the Withdrawals tab in your Beehive and choose how much you want to take out. PensionBee will deal with all the complicated parts and pay your savings into your bank account. And if you exceed your 25% tax-free allowance, PensionBee will tell you how much tax you need to pay.